always, this is your host, Prince Dice, coming to you guys live from Honolulu, Hawaii, with another great, awesome video. Before I jump into the video, if you guys just got your refund or looking to do something with your refund, and you're looking for some ways that you can possibly invest it, whether being investing is considered, publishing your own book, getting into real estate, starting your own business, getting into the stock market, getting annuities, all of the good stuff like that. On April 1st, which is the day I'm recording this video is tomorrow, because today is March 31st. Tomorrow, April 1st, I'm going to drop the link below. Go ahead and register for the video, not the video, but a teleseminar called www Refund to Riches. The teleseminar is called Refund to Riches. They're bringing on a financial advisor from the Ricky Smiley Show, financial advisor from the Steve Harvey Show, another real estate agent who's flipped over 5,000 properties, best-selling author of over like 3 or 4 published books or whatever. So, and then also, guess what? They got me. It's to bring people in to. It's my first event to be exact of an external event that I'm being featured in. But they're bringing me in to kind of help people get started if they want to get into the stock market. So, Refund to Riches. If you're interested in that, click the link below and go ahead and register and all the other good stuff. But I'm doing great. But guess what? I don't have a lot of time, and I definitely you guys don't have a lot of time, so I'm gonna jump straight into this topic. So anyway. Today's video, I can't remember who dropped the comment below. The last video that was called, not it wasn't called, but it was my review, a Prince review, a segment that I do here on my YouTube channel. I was giving a review on a company stock called Herbalife. I was asked by one of the contributors over at Seeking Alpha to write one, so I did it. And he said, "Hey Prince, could you do one on this bank in China versus JP Morgan?" I said, "Okay, cool. Of course I can." So this is what I have. This is what I have pulled up here. So the stock symbol for this particular bank is CICHY, as you can see up here in the search box. So up in the search box, that's what I typed in. That's what it is. So it's an ADR. ADR is a way for you to be able to go to the stock exchange and be able to invest or buy into foreign companies. It's I guess a simplified way of looking at it is if, hey, you want to invest into a company in Japan, you don't have to go to the Japanese stock market to buy into it. How can I buy this off the American stock market? Dow Jones, not the Dow Jones, but Wall Street essentially. How can we pretty much participate in this? And the ADR, what it does is take these foreign companies and kind of converts into our system where we can invest into foreign companies through the American stock system. So essentially, I'm looking at this, and on E-Trade, it doesn't have a lot of material on it. Of course, the stock trades at $12 right now, as you can obviously see, but also you can see the range of the stock is from $10 all the way until $20, the 52-week range. Nice little market capitalization of 156 billion, and it gives you the nice beta and shares outstanding, but not too much information. Now, one good thing that you guys, if you haven't picked up on, that I like about the stock already, off of first glance, is I like that dividend, 6.41% dividend. That's pretty nice, right? So looking at that, there's not too much information that's provided on E-Trade because it's I'm making the assumption that's because it's a foreign stock. Because not all foreign stocks don't have information, but just for whatever particular reason, they don't have a lot of information on this particular stock. Like you have no earnings pulled up, you have no fundamentals, so it's a little bit hard to look into this one. But what you can do, you can look into the, you can go into a Yahoo Finance, which I was able to get a little bit more information, but not a lot. For example, I can get the PE ratio, but the PE ratio is only good if what? Come on, you didn't know that? Come on now. How many videos I done said the PE ratio is only good if you can compare it to another stock that's in the same exact industry. So yes, I have the PE, the 12 months, the 12. Well, let me slow down for a second. It's the trailing 12 months, TTM. I have the trailing 12 months of the PE ratio, which you can kind of see right about here. Did I pull it up? Right here, which is 4.51. Hey, that's cool, but hey, I don't have anything to compare with, so that's kind of a little bit irrelevant to me. So what I'm left with, and the other one, they said compared to JP Morgan, which is Chase. All right, let me type in that for a second. So while that's pulling up, now automatically looking at this Chinese company, right? We all know China right now is having a hard time. China's in the dump. China, I won't say the dump, but they're having a hard time. It's been, when you get to the point where you got to stop trading on numerous occasions so far this year. They had to stop trading. They had to they've been pumping all type of money into the stock market, and which reminds me of our 2008, because we was kind of getting into that situation as well, where we was pumping. Well, we just kind of stopped not too long ago, but was pumping money to help stimulate our economy, all type of stuff, right? So with that being said, it looks like China is going through our 2008, which is not bad. This is a good time to go in there and find some things on sale, right? Remember 2008 when you had companies like Ford going for under $1, companies like I don't know all of them in particular off the top of my head, but there's a lot of companies that was filing for bankruptcy that went under. Some companies never made their way back, but a lot of companies were on sale, for example. So when I see things like uh, a country like China, it's a good time to go in there and find some good stocks for cheap. Now you got to think about it. A government, you know, a government like here in America, we have a free enterprise, right? Hands off, what kind of what they say, but I'm not a political expert, not my business, right? But anyway, you have free enterprise here, which means that a company can come in, start, does what it has to do. If it doesn't do well, it can crash or whatever. Now, I know we had some bailouts in '08. Some companies got too big to fail. All right, whatever. That's people's conspiracy theories, whatever. But in theory, a company can fail and go bankrupt pretty easy in America, right? Now, in China, when you have a dictatorship, it's not really free enterprise. The government tells people, hey, this is the cell phone service you're going to provide. You just can't go over to China and just be like, hey, I'm just going to go ahead and just open up a company right here, buy my own business, and go on. Because the government can say, hey, no, this is where we're getting our telecommunications from. This is where we're going to get our food. This is going to be this company. This is going to be that company, right? It's one of the liberties we have living here in America. So they don't have necessarily a free enterprise. So, Prince, what the heck does that have to do with the price of tea in China? Get it, China? Tea China? Okay, you don't get okay. But anyway, China, for example, when I look at a company that's entrenched in China's society, the likelihood of that company, like a bank, for example, a Chinese bank, is just up and disappearing, is pretty unlikely because the government controls or has a lot of control over where their enterprises work over there. So a company that's paying a nice dividend and a company that's going through a 2008, of course, companies like J.P. Morgan, uh, Ford, General Motors, the list just goes on of people who had problems in 2008. So this particular company here could be having a problem. It could be facing this 2008 because you can get it on a nice price right now. But comparing it to a JP Morgan, but that's a risk because it's a foreign company. But I'm just giving you my outside opinion since I don't have a lot of data on a particular other company to be able to file through. Maybe if I'm doing it wrong, if I'm not, or whatever, drop a link below, let me know. But now we look at a company like a JP Morgan. Right now, we know one thing I like to keep in, take a step back. When a company like JP Morgan right now, in America, we're experiencing a boom. I want to say all the way boom, but our economy has been pretty good compared to 2008. We've been in a bullish state. So, which means that bear is right around the corner, and that bear can come peeking his head around the corner later on this year, like I kind of expect anyway. So that means that when do you want to buy things? At the peak or at the trough? I want to buy things that's in the trough. If I'm looking for long term, if I'm looking for a short term or whatever, I will go with JP Morgan in this particular case because hey, it's a solidified company. The economy is going, in America, we're experiencing a little boom. Uh, that's one I would take if I had to just choose between another economy that's going down. So, if a short term investor, I would probably look at JP Morgan because JP Morgan is a company where, you look at the overall market right now, it's pretty strong right now in our favor. Pays a nice little dividend, but if you're not really going to be concerned with a dividend for short-term investment, but if it was something for the long term, a long term is considered a year and over. But let's say if I was looking 3, 4, maybe 5 years out or something like that, that's when I make and put a little money because the Chinese bank doesn't cost for $12 a piece, and it's also paying a nice 6% dividend. So that could be something I can use to buy and hold strategy, possibly to keep a close eye on to see, hey, because what goes up must come down. Because you got to think about it now. '08, China was looking pretty good. They owned all our debt. Their manufacturing was looking good. But now that we're doing good, they're not doing too well. And it's the seesaw effect. When we're doing bad, they're probably going to be doing good. You guys probably going to look back on this video and say, man, that guy was on to something. I definitely don't believe China just going to fall off the face of the earth and can't fix its financial system. It could happen, but I doubt it. But anyway, same thing with America. We have our booms and we have our busts. Just what happens. Every country has its booms and its busts, just like relationships and everything else that you do for a long term. So if I was a short term investor, I would look into JP Morgan. If I was a long term, I think that the Chinese bank stock uh, poised a little bit more of a long-term value, possibly. When they get their things fixed out, when our economy here start to decline, other economies around the world start to do a little bit well. And I think they're experiencing their '08. That's why their whole market and all the stocks has been having a hard time. Now, I'm not going to break down and go through here like the PE ratio, the equity ratio, the beta market capitalization, dividends, all of the stuff you usually see me kind of dig in and touch on because I can't really compare right now because I don't have a lot of data on the other company. But if I was long term, like I said, I'll probably look into China because I think right now they have a lot of stuff on sale, and I think they're experiencing a 2008 that I think they're experiencing a 2008 that we had, but I think they have a lot of good stuff on sale. But if it was long term, I'll probably look at them. They'll probably be good. But if it was short term, I'd probably go with a JP Morgan. Because, I think in China, things are going to get a little bit worse before they get better. But anyway, that's my opinion. That's my take. I hope that it helped you out. Stay tuned for more great videos. I don't want to lead into the next video. But you guys just stay tuned. You're going to see it. If you got any questions, issues, or concerns, don't forget to drop those likes, comments, and subscribes, and drop some comments below and let me know what you think. Give me a thumbs up if you thought it was a good video. Give me a thumbs down if you thought I sucked. But until the next video, you guys already know what to do. Peace. Be safe, and I'm out.